Welcome back to, are we live now? 5, 4, 3, 2, 1. Okay, recording. All right, everybody, welcome to Qredible Live. We have a great lineup today. These are two of my favorite guests that I get to talk to quite frequently about things. But when you're talking about the money, I mean, who better to talk to the money about but a banker? We got Peter Sue with us, and an accountant, right? A guy who works for Armanino, Mike Goral. Great to have you with us again. And today's topic is really about following the money in cannabis, hemp, and CBD. So we're going to sort of break down where is the money, where's the capital, where's it flowing, and probably where it isn't, right, across the cannabis, the hemp, and the CBD sectors. And so what are we seeing in 2005? What do we expect to see in the so even though I know these two guys pretty well, Peter, why don't you give us a quick summary of your background?
Sure. My name is Peter Sue. I'm the Director of Specialty Banking for Hanover Bank. I've been in banking, I'm not sure, maybe 26, 27 years. I've been in cannabis banking, let me see, about 8 years now. This is my third time running a program. I also write about the industry for Rolling Stone, Fat Nugs, and some other magazines.
Wow, banker for 26 years. Did you start at like 14? You're looking a lot.
Child labor laws where I'm from is very different. So
you're looking a lot better than I am in 30 years in tech. So anyway, Mike, what about you? Give us a quick background.
Thanks, Brian. Mike Goral. I am the partner in charge of the cannabis and hemp practice at Armanino, which is a national accounting firm. And I have been in this space since 2015, wrote the treatise for Thomson Reuters on multi-state cannabis taxation. So I just live and breathe this industry and all the financial and tax issues that comes with it.
Yeah, absolutely. And of course, Joy's joining us today because I keep freezing, right? So hopefully she has to step in because of my internet challenges. But Joy's with us today, and she's really been a key producer here of the Qredible Live broadcast. And Joy's with our marketing department. So we wanted to talk a little bit today about sort of the investment climate. So what's changed? What's going on? How do we see the shifts in funding and access to capital for cannabis, hemp, and CBD? So give us a little bit of an update on just sort of the environment, guys.
Mike, if you don't mind, I'll go first.
Yeah, go ahead.
So there's this saying in banking, don't lend money to someone that needs it. So I'm going to lead off that way. I keep in mind a traditional banker. I mean, my career has been as a lender, and in lending, we lend on history. We don't typically speculate. So my answer to you actually is that part of the equation has not changed much, in my opinion. The reality is lending is flowing in cannabis. It might be the only capital flowing in cannabis. So for better or for worse, one of the problems is speculative capital is just gone, is dry. That's probably not purely a cannabis thing. Part of that, a lot of that has to do with actually the interest rates. When interest rates were zero and you had to take some risk in order to make a return on your money, it's easier to find investor capital. When you can safely put your money in the bank and essentially without taking risk and get 5%, sure, as an investment vehicle, as a possible investment or someone seeking investment, you need to demonstrate that this investment opportunity can do better than that. So that, again, trickles down into the lending side as well. Again, debt capital is flowing, but it's expensive. You're talking about the private lenders are at in the teens. It has come down a lot over the years, but it's not cheap.
It's sort of like putting it on your credit card, right? It's
actually worse, I think.
Yeah.
Yeah, and I would echo Peter's, thoughts there. I mean, I'm certainly seeing it, in the industry where, the hype of this industry is a big roller coaster. When Biden came into office, there was a lot of optimism that he and his party would, be more, accommodating to the cannabis industry. That proved not to take place. And then Trump talks about, having, legal cannabis and voted for legal cannabis in Florida. during the campaign. Yet, obviously there's been a lot of other issues that are out there that are more, pressing, but still there's not a lot of encouraging news, coming from the head of the DEA. And, there was, descheduling hearings that were set, but then those got canceled. And now it doesn't look like they're going to be reset anytime soon. So, there's just not a lot of positive news, for an investor to, get into this industry, unless it's maybe one of the new markets that are, limiting the number of applicants that can get a license.
Yeah, and it seems like there's, originally there was this exuberance, like for the initial appetite was really growth focused and speculative and sort of exciting, and now it seems like it's shifting to this efficiency and compliance and resilience, right? So it's really going after those stable brands, and I think it goes back to sort of this mentality that you're talking about, Peter. It's like, don't give the money to people who need it, but those that are good credit worthy risks, right? It sort of makes sense. The fundamentals sort of stay in place, but we're seeing deal structures move from, I think, equity to more structured debt. And I think that's sort of your point, right? So that's sort of how we're seeing things change going forward. So private capital is not really equity anymore. It's really debt structures. And it seems to be that investors are sort of demanding a lot more than what they have before because of the looming threat of federal and state level restrictions, particularly in hemp and CBD. And then what are we doing on the cannabis side, so the marijuana side? So what do you think is really what the next 18 months to 2 years looks like? Do you see any improvement? What are your thoughts?
So Brian, you kind of casually dropped in the hemp CBD bomb.
You caught that, didn't you?
So I kind of so given that you've rolled a grenade out, I'm going to have to step carefully here. So two answers for you. One, in 2024, just under $1 billion worth of quote unquote new capital came into cannabis. Right, about 90% of that was debt. About 80% of that debt was earmarked was really refi. So you're calling a new capital, but you're really replacing, an old piece of debt. So again, I'm reinforcing my same thought that, like, look, capital is flowing, but it's predominantly debt, and debt goes towards history. That generally speaking, I'm sorry, I don't want to speak for everybody, but so in the cannabis space, the state licensed cannabis business, at this point, we're not guessing anymore. We have several years of history. So how are people getting capital? By showing history. Now, addressing the grenade that you casually threw out, suddenly there is a whole new world that came up seemingly out of nowhere, right? Despite the fact that Farm Bill came in 2018, but yeah, suddenly we have this brand new world where apparently you can sell hemp-derived beverages, smokables, edibles, et cetera, and you can ship them all over the country. And Edible Arrangements has invested into a website. Well, that of course has opened up a completely new frontier, in my opinion. I don't know. I'm going to leave that bomb for the professional Mike to address.
Well,
nobody wants that one.
Well, and the other thing is that many of the cannabis companies, seeing the success of these hemp companies, are starting to invest into those hemp companies and starting to shift their production away from cannabis to hemp, with less regulation and no 280E, tax ramifications to worry about. So, yeah, I mean it's really interesting how there's been this shift from legal cannabis market to the hemp market.
Yeah, but I think part of it is, we were talking about this before, Mike. You see the marijuana companies or cannabis companies are they're not happy with the CBD and hemp world, because over here you've got spend a lot of money to get a license, go through all of this compliance, And oh, by the way, you got 280E to deal with. And then over here, you've got the hemp CBD side, which is sort of like a nutraceutical company, right? Less restrictions. You can run it like a regular business. But, I think what's plaguing that side of the business is sort of this, what I call the alphabet soup of, the THCA, THCO, and all these different crazy things, which are clearly loopholes in the 2018 federal farm bill, right? And by the way, a lot of the CBD and hemp companies that I talk to, like they would prefer a lot of stuff to go away. Like, I think they're just being opportunistic on that side and taking advantage of it while they can. But yet we see hemp beverages, right? There's a lot of money going into hemp beverages. I was just talking to some investors last week that just invested in a THC beverage line, because to your point, look at that growth. And, and I know there's some crazy things being talked about of taking THC at all out of hemp. And I think that would be bad for America and what we see. But we're seeing investment on that side. I mean, I just talked to investors the other day about that. So I think what you're saying is there's active investment going on over here because of the freer market economy, if you will, than we see sort of in this bang our head against the wall marijuana side. Is that right?
Yeah, that's what I'm seeing.
Okay, now, Peter, I'm not letting you avoid that hand grenade. I'm sorry. You got to talk to me about that, because on the banking side, I mean, you're banking hemp and CBD companies, or you see banking, and it's different than banking an MRB or a marijuana related business. I mean, two different things there, right? I mean, so how do you look at that from a banking perspective? A CBD, let's say a THC hemp beverage company versus a cannabis company, pure cannabis company?
That's a good question, Brian. It's actually kind of fascinating in a way, if I put my nerdy, compliance hat on. So because if you are an institution that has made the decision to get into legal cannabis, in theory, you're saying, well, we have a set of guidance, right? And we have, conceptually, there's a state regulatory overlord that gives us some cover. In other words, I feel comfortable banking this New York State licensed dispensary because they answer to a higher power. That higher power gives me some air cover when my higher power comes and says, show me the work that you've done. That doesn't really exist in hemp, CBD, hemp derived, etc. And again, if you were to really peel that onion, you might say, I'm not sure that this is, I can't be sure that this is totally legit. So in other words, what I'm seeing out there is a huge range of different answers. As you go from institution to institution, you ask them that question that you just asked, you will get, if you ask 10 different institutions, you're probably going to get 10 different answers. You're going to have some folks that say, well, we will bank state licensed cannabis, but we actually won't touch hemp derived. You'll get folks that say, no, hemp derived is a normal business. We treat it like a normal business. And then, of course, you have the extreme opposite end, which is someone that just says no to all of it.
Well, we do know we have some pretty large banks that have tons of these hemp-derived products as customers, right?
Yeah.
So let's say the federal government, which again, I really do not believe in, my prediction is they're not going to just ban all THC, altogether. I think the most probable outcome is a more targeted approach to regulating intoxicating hemp. And getting back to what the Farm Bill was really meant to be before everybody found the loopholes. But having said that, I'm curious, like, okay, so I'm a bank. I got all this big portfolio of CBD hemp companies, and then all of a sudden it's federally illegal. Like, what do we do with all those clients that we have outstanding loans to, that we have, depository accounts on? It was just like, okay, guys, sorry, we're closing. We calling your loans and closing down your deposit accounts. Like, it's just, that would be crazy. But what are you going to do, right?
Well, so first of all, yes, that's exactly what you would have to do. And that, of course, is the reason why some folks are hesitant, or at least being very careful about jumping in. Think about it this way. If you are, and the vast majority of institutions that are in cannabis in some way, shape, or form, for the most part, relatively small. So, and listen, that's a very subjective term, but let's say for the sake of argument, you get a $1 billion bank, or a credit union, right? And they have a program that over the course of a year, 2 years, grows to $50 million, $100 million. Well, that is a significant percentage of that institution's assets under management. So if you're a $1 billion bank and now you have $100 million of quote unquote cannabis money, and you remove that, so roughly 10% of your bank you just shut down that portion of your portfolio. And God forbid you have loans out to some of these folks, and you have to call the loans, you have to manage them out of into some sort of a safety. That is a mess that nobody wants. So yes, that's a major issue.
I mean, that could shut down a bank.
I mean, maybe not, but if you're publicly traded, certainly you're going to have a major bump on the road. A lot of questions to answer to your regulators, shareholders, etc.
Well, it certainly hurt capital footings and camel ratings and all those fun things. So, but wouldn't be fun. What do you think, Mike?
Yeah, I mean, I think that, a lot of these companies are just, buying time. They've been doing this for years now, and, refinancing their loans, extending their loans, and, hoping that, okay, this is the year that things will change and make the industry efficient, from a tax and financial perspective. But it just doesn't seem to ever come their way. And it's been a little frustrating to watch because, there was all these hopes and dreams, with these companies. Then we had COVID that hit that kind of helped the industry because they were essential businesses, and there was a lot of government funding to help people that were staying at home to buy products. But all of that's gone now. And so, it's a very difficult environment with a lot of competition. And I'm just seeing that these established markets are continuing to suffer in the West Coast and whatnot. And these new markets, like I was in Kentucky just last week, and, they're starting their medical practice there. And that's going to be pretty lucrative, in the near future, because they only have like 40 something licenses that were issued. So I think it's just going to be based on the market and, how well these companies are run. And there's more, executives coming from the food and beverage industry that are starting to look at data analytics and really, scrubbing the numbers to be very efficient. Cost accounting, for instance, no one does cost accounting in this industry. What they do is they go across the street or the nearby dispensary and see what they're selling their flower for. And if they're selling it for $20 a jar, then they're going to sell it for 18, and that's how they do their cost accounting. And they have no idea if they can make money selling that product at $18 a jar.
Mike, I have a funny story for you. So I recently had a big grow facility in New York come to me for financing, to look at the financing, excuse me. And we're willing, able lenders in cannabis. And so, I start doing the underwriting, and turns out they haven't filed taxes the last 2 years, right? So naturally I ask, well, why don't you have any taxes? It's like, well, we're waiting with 280E is gonna get rescheduled. So once it gets rescheduled, then we'll backfile and we won't have to pay 280E. And I'm like, well, that's fine, except that you're also telling me you haven't paid taxes in 2 years. And how am I going to lend to an entity that hasn't paid taxes in 2 years? Because the government takes the precedence over me, right? Mm-hmm. But I guess I'm backing up your point, which is that, like accounting in cannabis is not great.
Do you think that's like, you think there's a lot of companies doing things like that? Like, hey, we're yes, hoping that 280E is going to get. That's crazy.
Yeah, and what's really crazy are some of these large MSOs that are taking the position that, hey, 280E doesn't apply to them, and so.
Well, wait a minute. One of them got away with it, didn't they? Should we mention who?
Well,
Like,
we
I
still
don't think
don't
you,
know the circumstances under how that company was able to do that.
Brian's just rolling out grenades today. You gotta watch this guy.
Well, I mean, they seem to be hiding the secret sauce. They've gotten away with it thus far. So, I guess it's not surprising that others might sort of try to take a similar route. But
Joy, this
I think
is being
I mean,
recorded, right,
that's
Joy?
playing with fire. What's that, Peter?
I'm gonna have to edit this whole portion out, guys, or at least put like a trigger warning.
No, I mean, look, it's the reality of what's going on, right? And it's a bit of a crazy environment, and so that's got to spook bankers. That's got to be spooking investors. But what are some of the other things that are really? What are those things out there that are really the red flags and the risks that are spooking them? I mean, not paying your taxes is probably one of them.
Well, forget about spooking. The reason I bring that up in a very specific sense is that in a lending scenario, so God forbid the loan goes bad and there's a default situation, right? Like the government takes precedence. Like my lien is essentially worthless,
Right.
and if they have a tax liability and an infinite one because they haven't paid, now there's penalties, et cetera, that's a non-starter.
So what are those big things that you're looking for in due diligence typically in one of these companies?
Oh, I mean, I wouldn't say there's a big thing. It's everything, right? We need to know that. Well, when I think about cannabis banking, the tendency for folks to think is that, hey, it's high risk, obviously, right? But the question is, why is it high risk? And again, here the tendency would be to say, well, it's federally illegal.
Mm-hmm.
But if you think about it, what can I do about the fact that it's federally illegal? Nothing. So the risk is not that it's federally illegal. The risk is that it is scrutiny. So if I have decided to onboard this customer, in spite of this possible risk, that means that I have, doubled crossed every T, double dotted every I. And when I say it means that, in most cases, every institution will put it into their policy, as I am too. In other words, you tell your examiners or your regulators, et cetera, we've taken on this challenge because we believe we're up to it. We believe we know how to do it. But if I've done all this, right? If I told you, yeah, I really scrubbed this file, and you come in, you as my examiner, you as my auditor, Mike comes in, and banks do this, by the way. We do what's called a BSA audit. We hire a firm like Armanino. They'll come in. They essentially do a soft audit of our books. If Mike finds something that I missed, despite the fact that I told him I've double, triple checked it, that's not good. So the risk is scrutiny, and you've invited the scrutiny. So I'm sorry, that's a long way of answering. Like when you say what's the big red flag, it's everyone, everything is a red flag.
So it's really not just, I mean, particularly with Bank Secrecy Act, where KYC, KYB is so important. It's not just about upfront underwriting. It's that ongoing diligence. It's that ongoing monitoring of that entity to see what's going on. Because to your point, the BSA auditor comes in, they're not just looking at what you did up front, they're looking at what you're doing now to mitigate your risk. Is that true?
Yeah, plus the FinCEN 2014 guidance and what are you doing about that? So again, it's honestly, it's normal compliance, normal BSA on steroids.
Right. And then I love the I listen, it's the day for hand grenades, so I'm going to drop another one. So then we got, I don't know if you followed the lawsuit with TrueLeave on the, they're using these ATMs, right? Cashless ATM transactions.
The switch, you're talking about the switch commerce?
Yeah, with switch commerce. So, you have this situation where Visa bangs on the acquiring bank, Pueblo Bank. Pueblo Bank passes it down to Switch. Switch passes it down in a lawsuit all the way down to TrueLeave. So now you have this. Now we're seeing a different level of risk. And whereas, I mean, let's face it, everybody's doing it. I mean, I don't think I've gone into a dispensary where I haven't used a ATM card traversing the ATM rails. And where do those ATM rails go? They go right up through Visa, right? And now we got a BSA KYC problem because technically this is federally not legal, but you got everybody using this thing as an ATM at the point of sale, right, to transact that business. And then we just saw something from the top of the chain from Visa go down to the acquiring bank, from the acquiring bank down to the actual processor or ISO, and the ISO down to the merchant. I mean, that's interesting in and of itself. I mean, a little bit outside of the banking and lending space, but a critical part of the financial ecosystem. So having said that, what is it going to take to get safer banking to help these problems out? Because I think safer banking can address sort of that payment infrastructure issue, and it can also address sort of the lending and capital structure. And some people say it's rescheduling, some people say it's descheduling. What do you guys think about that?
Mike, that one's yours.
You want me to take that one? Yeah, it again, it's one of those things where, safe banking has come across the House, several times, and it makes it through the House, but never makes it through the Senate. And, I think both sides would want to have safe banking. It just makes the regulator's job much more easier. There's a tracing that is available through having bank accounts where you see funds going in, funds going out. It just makes the whole industry more legitimate if you remove those barriers to banking.
Now, if Steve Shane was here, I think I remember him calling it a nothing burger one time, right? He referred to it that if it happens, it would be a big nothing burger. And I was always curious about that opinion about it, because some say that it's going to, open up the pipeline and make the compliance easier, right? Providing the safe harbor. But others say, not really until we drive towards federal legalization. And that's really what's going to open up the pipeline. But that's what, I mean, we can't even dream about that right there, especially with some of the drama going on in Washington right now.
Well, so let me say this about Steve Shane. Everything looks like a burger to Steve Shane.
Yeah.
Having said that, I do agree with Mr. Shane. I don't know if it's a nothing burger per se. It could be significant. The issue is, and all joking aside, Steve and I have spoken about this several times, and I think we're on the same mindset on this. The world that's safe banking, the original safe banking. So keep in mind 10 years ago, right? The world that it envisioned to create, it kind of happened. And what I mean by that is, I think about it from my perspective. I run a cannabis banking program. I try to onboard cannabis businesses on a daily basis. Almost every situation that I get into these days, and prospecting wise, I'm in a competitive scenario, meaning they have multiple options. They're actually asking me questions about fees and what else are you willing to do? Are you willing to lend? Blah 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 blah. It's not like they're just, oh my God, thank you. You're willing to take my account. No, they're shopping, and they have multiple options. I have to win that account. So what will safe banking do? Now, keep in mind what I'm saying. We don't know what's going to be in the final version of that bill, if it even passes. So of course, there's a lot of mileage between here and there, right? But if at the last version of Safer that went through, if that somehow passed, I'm not sure that it would do anything, because the world that it describes exists. Cannabis businesses that want banking can get banking. If anything, it's getting competitive. Pricing is coming down. Services are increasing. You're seeing banks do lending now to cannabis. Some of the peripheral stuff that you're referring to, let's say payments, for example, sure, that could be a sea change. Uplisting to a public market, sure, that would be a sea change. But if you're just talking about a checking account, I'm here to tell you that exists.
So it's half a nothing burger. It's a slider, right? It's
which would not entice Steve Shane at all, because he likes burgers.
Right. Poor Steve. He's not even here to defend himself. And if he
well,
was,
that's why I'm doing this. Right?
That's right.
He's bigger than I am. I wouldn't talk like this if he was here.
Absolutely. So okay, so that's the banking perspective. Okay, so this is the regulated depository institutions perspective, right? Which is a good one, and I think that's good to hear that it's competitive and that the money's flowing from the traditional, banking asset liability side. Okay, but then we switch gears to the private capital market. All right. And that I think we've determined is not much going. Is there anything going on in the private capital market other than debt? Oh,
of course. I mean, on an institutional level, probably not. But if you think about any new states, New York, New Jersey, Connecticut, all these new stores are opening up in some way, shape, or form. By definition, that's private capital, right? That's flowing in. I'm not sure if you saw this meme a little while back where it's the one where, guys on a job interview and he's being asked a question. The question was, is the cannabis industry contracting or expanding? And the guy says, yes. Because it's both simultaneously true, right? You go to the market like California, and you saw recently, California talked about how their tax revenue dropped 11% on a year-over-year basis. Right. So the market is by definition contracting, but in a new market like New York, well, of course it's expanding, right? It's all brand new. Every dollar is new. How are these, stores opening? How are these farms opening, et cetera? It's private capital is funding all of that. On the other hand, though, I think if you, to say there's no capital available, look at some recent deals, GTI, Trulieve. I mean, these are 9-figure bank-backed debt facilities. This is real institutional bank-based debt.
Right, but that's debt, right? And we've already established that there's a debt market out there. We've already established that the private capital markets has shifted largely to expensive debt, right? I mean, that's what it is. It's largely expensive debt. But are we seeing any private equity? Like, are we seeing, pure equity type deals being done out there?
No.
I'm not aware of one.
Too many companies got burned, in the last, say, 5 years or so. And, now these, the ones that are publicly traded, their stock prices are at historic lows, and no one sees that changing anytime soon. And then you look at the overall, economy, with the tariffs and things, there's just a lot of question marks about the national economy. So everyone's focusing more on that than cannabis, because it doesn't seem like, okay, cannabis is going to be a quick way to make your money back on an equity investment.
Yeah. So, when you look at sort of the ATR, the ability to repay on some of these companies, when you're looking at some of, like, literally, I was talking to one company that brought in like $20+ million in debt. And a lot of the capital innovations and investments in technology and other things, I mean, got halted because the business is now focused on debt service. Right. And I mean, which is a dangerous thing for some of these businesses, particularly as we're seeing competition emerging, as more licenses are coming out, and we're seeing the space expand. So it sort of, to me, begs the question of, all right, we've got companies laden with debt and an increasing amount of debt because it's the only real way to get financing. 28% of the industry, right around 30% of the industry is making money. 70% is not, right? So, and we see this situation where there's got to be some type of consolidation coming. I mean, so what is your thoughts about where we see this sort of strategic M&A? Because to me, it just seems to be screaming for that. Like, if we can roll up and get economies of scale, right? And especially if the balance sheets are laden with debt, it would seem to me that with new competition coming in, that there's opportunity for consolidation. What is your thoughts about it?
Yes.
That wasn't a hand grenade. That was, I think that was an easy one. Give me more than just yes, Mr. Sue.
Glass House. They have something like 3/4 of the capacity is unused.
3/4. So
yeah, they have something like 4 grow rooms, of which only 1 is in active use. So in other words, if federal legalization was to happen today, just quick math, they could probably knock out half of the cultivations in the country. So consolidation, yeah. Recently the how cannabis beverages for the longest time was talked about as the next big thing. It was going to happen. It was the next big thing. But it never did happen, right? Because SKUs, they became a negligible SKU in a typical dispensary. But then suddenly cannabis beverages did become the next big thing. But how did that happen? They were taken out of dispensaries. They were put into regular distribution channels, bars, trucks, etc. Right? And suddenly they're flying off the shelves. They're in total wines now. So that tells us a couple things. One, true, cannabis beverages was the next big thing. But does it also tell us that the dispensary model perhaps is not a great model? So to me, both things seem to suggest that, yeah, we're heading towards a point where, look, we don't need all these stores, all these cultivation, et cetera, et cetera. Sure, on a state-by-state basis, maybe, right? But what if you did it?
Interesting.
Yeah, and I'm seeing a lot of the larger, better funded MSOs targeting, their competition in certain states, and so no one's interested in picking up a great opportunity in California. It could be, selling on pennies on the dollar, and it doesn't matter because no one wants to be in California. But in a state like, say, Ohio, or something that's new to the market, where there's less competition, then yes, someone that has an established brand is going to want to cherry pick and say, hey, you've got one license in this particular jurisdiction. I'm interested in that, but maybe not the rest of your company. So even if you have dispensaries in 3 states, they may want the dispensary in a certain state.
So what do you think the drivers, the financial value drivers, are going to be for companies as good acquisition targets?
Well, I think it's going to be that 30% that you were saying that are operating at a profit. Those that are run efficiently and well, and the owners are not going out buying Ferraris, they're going to be the ones that are going to, succeed by just trudging through it. One thing that I'm seeing out there that's a positive for the industry in terms of debt and these issues here is companies that are converting to an ESOP. And in an ESOP environment, the ESOP doesn't pay taxes. So you don't have the 280E issue. So that all of a sudden your cash flow now is substantially increased because you don't have that burden to deal with. Now, it's true that in order to make this work, the company has to take on debt that will then, be paid off using this extra income that's coming through from not having a tax liability. But, I think that's something, we could do a whole webinar on that. And I think this is a fascinating way to get around 280E, allow the original investors, owners of these companies, they can cash out, say 20% of their company and hold on to the remaining 80%. And this could be a way of getting funding that they're looking for from Peter and others.
Interesting. Have you heard about that, Peter?
Yes, I also heard that Steve Shane thinks ESOPs look like burgers.
Oh boy, we're gonna get him on.
Are they juicy burgers or are they like what?
We're gonna get him on the next one and watch you guys fight it out like you did the last time.
Honestly, with respect to ESOPs, and please, Mike is obviously the more professional, the more experienced person to speak out ESOPs out of two of us, but I'm not a huge fan. I feel like it's a very situational thing. Like if your situation happens to fit this pretty specific parameter, then sure, beautiful option. But if you don't, I think trying to squeeze that in is squeezing something in.
Yeah, no, and I agree with you, Peter, because it's not for everybody. But if you happen to be in the right kind of situation, it's a good way of getting that financing that you're looking for without really giving up a whole lot and still keeping something, for a later payday.
So since we're talking about the creative financing side now, right? They're outside of traditional debt instruments or traditional VC or private equity or on lending. I mean, what other alternatives exist out there? I mean, is crowdfunding possible? Like regulation, what do they call it? CF, is that possible? Crowdfunding?
As I understand it, that's a controversial question. Now, I am aware that there are a few funding vehicles out there that have actually successfully raised through crowdfunding. But at the end of the day, it comes back to the same problem, which is obviously at the heart of the question is what is a federally illegal enterprise? So can you take something that was created under federal law, obviously, right? It's the same question like, okay, 401k, right? Literally a federal tax code. Can a cannabis company give its employees 401ks, which again is a federal tax code? Honestly, on paper, you might say no, but they exist.
Well, cannabis employees can't even get mortgages backed by Fannie Mae and Freddie Mac. So,
well, again, same question, right? Like, can you take if somebody is a W-2 employee and like my job is a trimmer, right? So 100% of my income comes from doing something that is federally illegal. Can I take that mortgage and sell it, package it up, sell it to Fannie and Freddie, which currently is actually owned by the Fed, right? Again, on paper,
unless they go public, right?
Yeah. Again, on paper, you might say no, but it's happening, right? So,
right. Well, that's is there anything else? So, if I mean, I haven't really heard of any other creative financing models. And I've heard some of this talk about crowdfunding, but curious if you guys are aware of anything else for these folks trying to get funding.
I don't. I mean, to me, that's part of the problem, right? Again, it's not that capital isn't available. It's not that lending isn't available. It's that you generally speaking, you just have less options, and that's a broad across the board kind of response, right? Less options in terms of the number of institutions, less options in terms of number of tools, et cetera, et cetera.
Yeah, the only other thing that I'm seeing is that the EU is, in Germany in particular, is expanding, their cannabis programs. And there is some interest of like German companies to bring in US brands to Germany and vice versa, maybe invest in US companies in order to help facilitate that. So, and that's kind of a new area. South Africa is starting to, legalize their program as well. And so you're going to be seeing, I think, more international expansion, ironically, more than here in the US.
That's interesting. I know Canada can do that, but without having a federally approved market. I mean, how do we even operate in an international market? How is that going to work?
Yeah, I mean, I know that there are experts, just like Peter is saying that, people are doing these things that on paper, they say you can't, but, there's nothing wrong with them sending, say, something like cannabis seeds and their strains to foreign jurisdictions because the seeds contain less than 0.3% THC.
Maybe we should have a webinar on loopholes. We'll get Steve involved.
Good luck getting any guests, but okay.
Yeah. Exactly. So what, I mean, all right. So just sort of as we wrap things up, what advice would you give for founders that are seeking capital right now in this industry?
Oh, to me, I think that folks should actually look for investment dollars less. The reality is, if you've got a startup business, and this is true of any business, not just cannabis necessarily, that foundational piece, right? When you think about the term capital stack, like that foundation, it really has, it kind of is on you. If you don't have the capital to start that base foundation, there's not going to be a business. Now, if you have a rich uncle, you have friends and family, like if you can't get the foundation of the house built, sorry, but there's not going to be a house, right? Now, outside of cannabis, and then this is where maybe perhaps state governments can step up. Look, outside of cannabis, that's where we could probably turn to a vehicle like the SBA, which just simply isn't available in cannabis, right?
Correct.
So in a way, conceptually anyway, I would say that in theory, there's a simple answer, which is state governments jump in and say, well, we're going to fill a need that where there's currently a gap.
Yeah, I know. Even for picks and shovels companies that even have cannabis on their website, even if they're not 100% tech, SBA will steer away, from those types of things.
Yeah, and this SBA actually recently updated, and then they've been whipsawing back and forth on what is or is not, what does or what does not qualify. Believe it or not, there is no textbook definition for what is and what is not a cannabis business. And that sounds weird, but there is not a textbook definition for what that is.
Has anybody told the SBA that, or?
Well, so the SBA, as of the most recent update, which was very recent, like the June 2nd or something like that, and they've taken at this point the most restrictive stance they've ever taken. And yeah, to your point, even like ancillary businesses, lights, et cetera. It's probably interpretive, but still, the point is that this is the most restrictive they've ever been.
What do you think, Mike? What tips would you give?
Yeah, I think what they need to do is spend more time in the back office and making sure that their accounting, work papers and documentation is all clear, because many of these companies are being run not knowing, are they doing well, they're not doing well. All they know is that how much came in, and then they know maybe how much revenue went out for expenses, but they're not like tracking to figure out like what's working, what's not working. And I think that's the area that needs some help. And once you get, like Peter was saying, your foundation and your company up and running, and you have a good track record, well, that's when lenders, investors, and everybody else are going to be interested in helping you out. Unfortunately, like in California, I think half of the licenses that were up for renewal this year were not renewed because those companies went under. So it's significant.
That's crazy. And I think, to your point, to both of your points about sort of having the money to grow the infrastructure, I find that in any business, right? If you're out there seeking capital and you're a founder, you better have some money where your mouth is, right? Money into the business and sort of bootstrapping to get to a point where, you can prove out the model, that you can prove this works. And also, to your point, Mike, is governance is absolutely key. And again, to me, it's like, it's not just in cannabis, it just seems to be lacking in cannabis. So, you got to have it in any business, a proper, governance policy and, clear accounting principles and basically all of your checks and balances in place. I mean, it's hard enough to get money in the cannabis industry, but don't start with, both arms tied behind your back and not having proper accounting, or for all means, and make sure you're paying your taxes, right? So you got to have these things in place.
The reality is that like most of my clients had a 3 to 5 year exit strategy, like a PE firm. They never thought that they would be still holding on to the company past year 3, or 4. and now they're finding that, if they're still around, they've held this company maybe for more than 6-7 years now. And, so it's just a tough market. And, unlike everybody thinks that, oh, they're so profitable, they make so much money because it's just basically weed. How much can it cost to grow it and sell it? And it's not like that.
Not
Mike,
as
how much
easy
does it
as
cost to
looks.
grow weed, Mike?
It obviously it varies, but like in California, an open grow, you could probably, grow it for, $75, $100 a pound,
Okay.
but, in places like Massachusetts where you have an indoor grow, it would be substantially more because you got, all the electricity for the lights and, humidity controls and all that kind of stuff just makes it much more expensive.
All right. Well, you heard it right here, folks, that Peter's lending. Peter's open for business. As long as you're paying your taxes and you can get through the underwriting and do all the right stuff. So how do folks get in touch with you, Peter, if they're interested in learning more about how you can help?
Sure. I guess the easiest way is to find me on LinkedIn. I'm Peter Sue on LinkedIn.
And just look for Peter. You'll see him. He's got about 900 letters behind his name. So are you working on any new ones? We're going to see any new designations or certifications?
No, it turns out there is a limit to how much.
I'm kidding, folks. Just go to his LinkedIn profile just to see the amount of letters behind his name.
Ask me how I know that there's a limit to the number of characters.
If you've hit it, that's why you know. Peter hit the limit on the letters behind the name. I love it. How about you, Mike? Because obviously we're talking about how important it is to get capital, keep capital, and stay in business. Run your company right, and Mike can help you with that at his firm. How can they get in touch with you?
The same way on LinkedIn, Mike Goral at Armanino. And
how many letters do you have behind your name?
I've got I think 2.
Come on, you got to catch up with Peter.
JD and LLM, so yeah.
I've got no letters behind my name, so I'm the loser here. So anyway, guys, great talking to you as always. I love to check in every once in a while to see how things are going. Next time we got to have Mr. Shane on here so we can watch him and Peter fight about the Nothing Burger. So anyway, great. Thanks for joining us, guys, and good to talk about this always with you. So thanks so much.
Thank you.
Thank you, everyone.
All right.